In episode 2 of Assetization Radio, we unpack how Ondo Finance is putting treasuries on chain and shaking up the old guard of yield.
Welcome to the deep dive. You've given us this stack of sources and, well, our mission is pretty simple. We sift through it all, pull out the most important stuff, insights, facts, those aha moments, basically help you get really informed really fast.
Think of us as your guides, yeah. We're digging into all this material you sent over.
Yeah.
Trying to give you the clearest picture of what really matters today.
And today we are diving deep into a company called Ondo Finance. It looks like, based on everything here, they're positioning themselves right at that crossroads. You know, traditional finance, Wall Street, banks, and decentralized finance, DeFi.
Yeah, their core mission seems pretty clear from the get-go. They want to bring institutional-grade financial products and these things called real-world assets, or RWAs, bring them onto the blockchain. They're definitely targeting that high-value regulated side of things.
Okay, so for this deep dive, we really want to help you understand the critical bits about Ondo, their strategy, the actual products they've built, this unique infrastructure they have, Ondo Chain, plus their innovations, key partnerships, and even some of these maybe unexpected political connections mentioned in the sources.
Exactly. We're going to unpack the architecture they're building sort of piece by piece.
All right, let's kick it off. The material says Ondo Finance started back in 2021. Nathan Ullman, founder, came from Goldman Sachs. That tells you something right away, doesn't it?
It really does.
Yeah.
I mean, the idea from day one seems to have been bridging that gap, taking the kind of, sophisticated institutional stuff, structured finance, risk management that someone from Goldman knows inside out, and building it for the blockchain world. They're not just building in DeFi, they're explicitly trying to connect to TradFi.
And wow, they've built quite a range of products to do that. The sources detail a few key ones. First up, USDY, US dollar yield token.
Right, USDY. It's pitched as their sort of unique stablecoin alternative. What's really key here is how it's backed. Short-term U.S. treasuries, bank deposits. It offers daily compounded interest, which is nice. But for that institutional crowd, it's the transparency features that jump out. Things like bankruptcy isolation, daily third-party reporting on those assets. That's not something you see with every stablecoin out there.
Okay. Then there's OUSG. Sounds similar, but different. U.S. short-term government bond fund.
Yeah, OUSG is also backed by short-term treasuries, but this one, it's specifically for qualified purchasers.
Ah, so more restricted.
Exactly. Strict know-your-customer KYC accreditation needed. It's really built for that permissioned institutional use case. The sources say it offers instant subscription and redemption. That's a huge efficiency boost compared to traditional funds. And strategically, they shifted its underlying investment to BlackRock's BUIDL fund back in March 2024. Well, that's a big nod, right?
Definitely. They also built something called Flux Finance.
Flux Finance, yeah. It's a decentralized protocol developed by the Ondo team, but governed by the Ondo DAO. Think of it like a decentralized repo market. It lets users lend and borrow, specifically against tokenized securities, and it can handle both open stuff like USDC and restricted tokens like OUSG as collateral. Crucially, it has compliance features baked right in for those restricted assets. The sources call it a secure bridge between DeFi and TradFi for lending.
Got it. Okay, and then there's the really ambitious one, Ondo Global Markets.
Yeah, this is where they start talking Wall Street 2.0. This is their big platform aiming to bring traditional public securities, we're talking stocks, bonds, ETFs, straight onto the blockchain. The vision, direct distribution, cutting out intermediaries, lowering costs, simplifying admin. The idea is these tokens are 1.1 backed by the real securities, freely transferable on-chain. It's a massive undertaking.
Huge. And finally, the Undo token itself.
Right. That's their native ERC20 token. Mostly for governance. Lets holders have a say in decisions, plus some utility like potentially fee discounts or staking rewards.
So quite the product suite, all aimed at bringing TradFi assets on-chain. But beyond just tokenizing things, why are institutions really paying attention? What's the specific hook for these big players?
That's the million-dollar question, isn't it? For institutions, I think it boils down to trust, efficiency, and, tapping into new capital pools. The sources lay out a few key benefits tailored just for them. First, better transparency and efficiency. Using blockchain, smart contracts, you get automated, secure, immutable transactions. Cuts out manual work.
Less risk, faster settlement.
Exactly. Less fraud risk. And settlement goes from days to minutes. That's huge.
Frees up enormous amounts of capital, I bet.
Precisely. Second, robust regulatory compliance and risk management. That's built in. KYC-AML checks, smart contract audits, and products like USDY have features institutions demand, like that bankruptcy isolation, their compliance-first approach. That's absolutely critical for attracting regulated players.
And making these assets accessible globally 24/7, is that another plus?
Definitely the third benefit. Democratize access, global liquidity. Tokenization means these services aren't stuck in one geography or time zone. 24/7 trading, seamless cross-border stuff. It could potentially make traditionally illiquid assets, like maybe some corporate debt or real estate, much more liquid.
And fewer middlemen usually means lower costs, right?
Big time. Cost optimization is a major draw. Direct distribution of these tokenized funds can really slash intermediary fees, simplify fund administration, saves big institutions serious money.
And for investors just looking for yield?
Well, tokenized RWAs, like the government bonds behind USDY and OUSG, they're engineered for stable, predictable dollar yields. In today's volatile markets, that kind of reliable income stream is very appealing for portfolio managers.
Right. And finally, the whole point of blockchain programmable assets.
Yes. Blockchain lets you do things you just can't easily do in TradFi, like automating dividend payouts, building complex revenue sharing models, or intricate structured products right into the token itself. Opens up all sorts of new possibilities for financial engineering.
So the real insight here isn't just putting old products on a new chain. It sounds like Ondo is fundamentally re-engineering them and the whole infrastructure to meet those tough institutional demands, but also leverage blockchain's unique perks: speed, transparency, programmability.
And what's really interesting is how they're tackling regulation itself. That dual strategy, USDY being more open but transparent, OUSG being strictly permissioned, it shows they're carefully navigating the rules, trying to capture different market segments at the same time, and getting giants like BlackRock and PayPal involved. That's not just name dropping. That integration basically de-risks Ondo for every other institution watching, makes it much easier for the next one to jump in.
Okay, so they've got the products, the benefits for institutions. Check. But building this institutional grade stuff isn't easy on, say, standard public blockchains. The sources say Ondo didn't just build on a chain, they built their own. Tell us about Ondo Chain.
Right, this is where it gets really interesting. Ondo Chain is a public proof-of-stake layer 1. And the sources are clear. It's purpose-built, designed specifically for institutional-grade RWAs. The whole point is to provide the speed, security, and frankly, the user experience that TradFi demands in a way they'll actually trust and use on-chain.
And they use the Cosmos SDK to build it. What's the significance of that choice?
Yeah, that was very strategic. The Cosmos SDK allows for a modular architecture. What that really means is Ondo could tailor the chain precisely for tokenizing RWAs, build in the exact features needed without the baggage of a general-purpose chain. This helps them tackle challenges like, potential DeFi incompatibilities, liquidity getting fragmented everywhere, or those volatile transaction fees that are just a non-starter for big financial firms.
The material calls it a mix of the best of public and permissioned chains. How does that work? How can it be both?
That's their hybrid model. So you get the transparency and access of a public chain. Anyone can look at transactions. But you combine that with security, compliance features, and sort of controlled environment you'd find in a permission system. The goal is to satisfy both sides: the need for verifiable, on-chain proof, and the strict requirements of regulated finance.
Okay, so what unique features did they bake into Ondo Chain specifically for institutions?
They really thought this through. First, permission validators. Only reputable financial institutions can actually run the validator nodes that secure the network.
Ah, okay. That's big.
It's paramount for institutions. It cuts down risks like front-running, builds a layer of trust and compliance right into the network's security, directly addresses a major worry about open public chains.
Makes sense. What else?
Second, RWA staking for network security. So instead of validators staking, volatile crypto, they stake high-quality RWAs, actual real-world assets. This lines up perfectly with how TradFi thinks about risk management. Lets them use assets that might just be sitting idle and potentially lowers their costs compared to holding and staking some volatile crypto.
And transaction gas fees are always a sticking point for TradFi getting into crypto tokens.
They tackle that too. Gas fees on Ondo Chain, payable directly in RWAs.
Really?
Yeah. This completely removes the need for institutions to buy, hold, or worry about the price swings of a separate native crypto token just to operate. It massively simplifies things for regulated companies.
Okay. And for a global market, assets need to move easily between chains. Right?
Absolutely. That's where their native cross-chain bridging comes in the Ondo Decentralized Verifier Network, or DVN. It uses multi-attestation protocols designed for seamless, secure transactions across different chains. Crucial if you're tokenizing global assets.
And how do you prove the tokens are actually backed by the real stuff off-chain? That's always the question.
Addressed by their enshrined oracles and proof of reserves. So validators publish relevant off-chain data, like prices or rates. But more importantly, a specific subset of validators is tasked with verifying, often with custodians or brokers, that the RWA tokens on-chain are fully backed by the real assets held off-chain. This shifts that crucial verification from just a single issuer to a distributed network, boosts transparency hugely, and tackles that risk of under-collateralization head-on, a major concern for investors.
And the whole ecosystem built on the chain is finance-focused too.
Exactly. The apps, wallets, partners, they're all geared towards sophisticated financial markets. Think prime brokerage features, institutional staking, on-chain wealth management, handling complex corporate actions. It's not just a general chain, it's engineered specifically for finance primitives.
So the real insight into Ondo chain is they built it specifically to address TradFi's deep-seated trust and operational worries. Using this hybrid public permission approach, how does that hybrid design really bridge that trust gap for cautious institutions?
Well, it basically integrates the trust frameworks TradFi already gets and relies on like whitelisted players, third-party verification, compliance checks right into the blockchain's architecture.
Yeah.
It builds that familiar verifiable layer on top of blockchain's transparency, embedding things like permission validators, verifiable proof of reserves at the protocol level. That speaks the language of institutional risk management. And again, paying gas in RWAs. Seems small, but it lowers a huge operational hurdle. And just circling back on the Cosmos SDK choice, the real cleverness there is getting this specialization without becoming an isolated island. Cosmos is built for interoperability. Through things like IBC, Ondo Chain can connect and talk to other chains. That's vital for pulling in liquidity, building that global RWA market they envision. Addresses liquidity fragmentation by building a chain that can connect.
Okay, let's shift to the groundbreaking stuff. What specific product innovations or maybe first-of-a-kind milestones mentioned in the sources really show Ondo pushing the envelope?
Well, even going back to 2021, they had things like Ondo Vaults, early structured products offering choices between yield or protection. That showed their intent early on. USDY, like we talked about, is highlighted as unique because of those specific transparency features, bankruptcy isolation, third-party reporting, sets it apart.
And that huge Ondo Global Markets vision.
That's definitely a strategic moonshot, Wall Street 2.0, putting thousands of public securities on-chain. The sources mentioned leveraging Solana for its speed and low cost here, which could make trading these assets way more efficient and accessible.
And Flex Finance, bridging lending and compliance.
Yeah, that's key, bringing a core TradFi function, the repo market, into DeFi, but with the compliance needed for regulated assets, that's innovative.
Beyond products, the sources mentioned some big firsts, some landmark achievements. What really stands out?
The biggest one, honestly. It's that cross-chain delivery versus payment test, the DVP test they did with JP Morgan Kenexes.
DVP test. Sounds technical, but important.
It really is. Described as a groundbreaking $2 billion tokenized asset settlement. They ran a successful test on the Ondo chain testnet, showing atomic settlement of OUSG, their tokenized treasuries. And this was across two different types of blockchains, their public Ondo chain and JPM's permission Kenexes network. Use Chainlink to coordinate it all.
Wow, so they prove you can move a tokenized asset on one chain and settle the payment simultaneously, securely, on a totally different permissioned bank network.
Exactly. This isn't just theory. It shows the practical application. Merging bank payment rails with tokenized assets. It directly tackles settlement failures, a huge, costly problem in TradFi, and makes things much more efficient. It's like a foundational proof of concept for a future global financial settlement layer. Tackles cross-border complexity. And being first to show this kind of high-value DVP with a giant like JPM, that positions Ondo very strongly as a leader, building critical infrastructure.
What else? Any other big milestones?
Another major one is integrating OUSG with BlackRock's BUIDL fund and also PayPal's PYUSD stablecoin. Through something called Ondo Nexus, they pioneered 2047 instant conversions between OUSG and PayPal's stablecoin. This boosts OUSG's liquidity for redemption and gives PYUSD more utility in the RWA space. The sources mention a $25 million conversion facility, one of the largest between a stablecoin and a tokenized money market fund, another key bridge between tokenized assets and widely used payment systems.
Yeah, these aren't just tech demos. They're showing real practical uses for traditional finance, like right now.
Precisely. And thinking about Ondo Global Markets again, that vision, tokenizing thousands of public securities, it fundamentally challenges existing brokerages, exchanges, aims to reshape capital markets, 204/7 trading, instant settlement, fewer middlemen. Now, that kind of ambition will definitely attract regulatory attention, no doubt, but if they pull it off, could unlock immense value, making traditionally illiquid assets easily tradable on-chain.
Let's switch gears a bit and talk about who they're working with. The sources list some incredibly high-profile partners. Who are some of the main institutional players mentioned?
Yeah, the list is genuinely impressive. It says a lot. BlackRock, obviously. Listed as a design advisor for Ondo Chain, plus the OUSG integration with their BUIDL fund. That's massive validation from one of the world's biggest asset managers. Fits right in with Larry Fink's comments on RWA tokenization too.
And PayPal was mentioned again?
PayPal too, yeah. Another key design advisor for Ondo Chain, and that PYUSD integration for OUSG conversions is significant. Links the RWA market to a huge payment ecosystem, boosts liquidity.
We just talked about the JP Morgan test.
Right, JP Morgan Connexes was the crucial collaborator there, alongside Chainlink. Prove they can operate securely across traditional bank networks and public chains.
Any other big names advising them?
Oh yeah. The design advisor list for Ondo Chain includes names like Franklin Templeton, Wellington Management, Wisdom Tree, Google Cloud, ABN AMRO, Aon. It's a really solid group. Plus strategic partnerships with MasterCard, Aptos. Adds a ton of credibility.
That level of partnership seems like a very, very big deal. How does that actually help Ondo beyond just looking good?
You start to see this flywheel effect. Every major TradFi player that signs on integrates. They're essentially validating Ondo's tech and compliance. And that, in turn, massively de-risks the platform for the next potential partner. Makes it way easier for other conservative institutions to look and say, okay, BlackRock, JPM, PayPal, they're working with Ondo. Maybe we should too. It just accelerates adoption, lowers those really high due diligence hurdles. The sheer number of these top-tier partners, plus their market share lead, it suggests Ondo isn't just playing in the RWA space. They might actually be setting the standards for how institutions engage with it.
And beyond partners, the leadership team itself has deep TradFi roots, right?
Mm-hmm.
How does that background play into their success?
That's a critical edge, yeah. The sources highlight this. Nathan Ullman, the founder CEO, came from Goldman's digital assets team. Ian DeBode, their chief strategy officer, led digital assets at McKinsey.
How does that kind of experience help them?
It's huge. Their background means they get complex capital markets, they know the regulatory minefield, they understand the specific pain points institutions deal with every day, and crucially, they have the network and the credibility to build trust and actually explain their value proposition effectively to other TradFi folks. That's really hard for a purely crypto-native team to replicate quickly. It definitely feeds into that compliance-first approach.
Looking at the overall market, how do the sources position Ondo? What are their competitive advantages?
The picture painted is one of clear market leadership, especially in their niche. They've apparently captured over 80% market share in tokenized U.S. treasuries, measured by the number of holders. They're managing around $600 million in tokenized assets and have blown past $1 billion in total value locked across their whole ecosystem.
That's a strong starting point. What gives them the edge?
A few things seem key. First, that comprehensive product suite we covered, funds, stablecoins, lending, issuance, their own chain. It's more of a holistic solution compared to competitors just doing one or two things. Second, that relentless compliance-first focus, built into everything. That's essential for attracting conservative, especially U.S.-based institutions. Third, their own purpose-built Layer 1, Ondo Chain. Optimized for RWAs, tackling infrastructure issues like fragmentation, fee volatility, with compliance baked in right at the base layer. The sources even note they've surpassed BlackRock's Securitize in the value of tokenized treasuries. Really highlights their lead in this key area.
Now, we need to touch on a unique and potentially complex aspect mentioned in the sources, a connection to entities linked with Donald Trump. Based strictly on the material you have, what's the story there?
Okay, yes, and we'll report exactly what the sources state here, maintaining strict neutrality, of course. The material confirms Ondo Finance has a partnership with a company called World Liberty Financial, or WLFI. The sources describe WLFI as a crypto company that is, well, explicitly advertising connections with Donald Trump and his family.
And what does WLFI plan to do with Ondo's products, according to these sources?
The sources say WLFI intends to integrate Ondo's USDY and OUSG, those yield tokens, as treasury reserve assets within their own system. They also apparently plan to incorporate tokenized securities from Ondo Global Markets. Importantly, the sources note these offerings are aimed specifically at non-U.S. citizens and users outside the U.S., where it's legally permissible.
And the Trump family involvement, what do sources say about that?
According to the sources, Donald Trump Jr. is listed as the Web3 ambassador for WLFI. Eric Trump is involved in management. A Trump business entity reportedly holds a 60% stake and gets 75% of revenue from coin sales. Donald Trump himself is listed with the title Chief Crypto Advocate for this project. Also, one of WLFI's co-founders, Chase Harrow, is mentioned in the sources talking about plans for WLFI to use purchased tokens for a strategic reserve. The sources note this aligns with the past executive action from former President Trump calling for an evaluation of a digital asset stockpile.
Okay, it's really important to put this in context, right? This isn't a direct U.S. government link.
Absolutely critical distinction, and the source material emphasizes this strongly. World Liberty Financial is a private company, despite these very public connections to political figures. Donald Trump Jr.'s involvement, or any endorsement, is not an endorsement by or relationship with the U.S. government. Ondo's relationship here is primarily with a private business that just happens to be tied to these figures.
How does this fit with Trump's broader stance on crypto, which the sources say has evolved?
Right. The sources document a pretty significant shift. Back in 2019, 2021, he was skeptical, calling crypto not money, a scam. But during the 2024 campaign, his tune changed quite a bit, becoming much more openly pro-crypto. He hosted crypto events, appointed people seen as crypto-friendly. The sources suggest this shift could potentially make asset tokenization a policy priority if he were to return to office. That could act as a significant, though obviously politically charged, tailwind for companies in this space, like Ondo.
But the sources also point out controversies and potential conflicts of interest, specifically around WLFI itself.
Yes. This is where it gets messy, and again, we'll just relay what the sources state without adding judgment. The material says WLFI has faced significant criticism. It's described as having a governance structure that's highly centralized, skewed towards insiders, and allegedly disproportionately benefiting the Trump family. A New York Times investigation cited in the sources is quoted describing WLFI as eviscerating the boundary between private enterprise and government policy, something unprecedented in modern U.S. history. The sources mention concerns about potential conflicts of interest, alleged secret deals, and dealings with individuals reportedly under investigation or with prior records. As one specific example, the sources state that an SEC investigation into Justin Sun, an investor advisor for WLFI, was reportedly dropped shortly after Trump took office in 2025. Again, just reporting what the source material presents as fact.
This clearly creates a tricky dynamic for Ondo, balancing potential upside with pretty significant risks.
It absolutely does, according to the sources. You have this potential strategic opportunity visibility, maybe access to a political sphere that might become very pro-crypto. But that's weighed against serious reputational risk from WLFI's controversies, its perceived governance issues. Ondo has to navigate this, leverage potential political tailwinds while trying to maintain that strictly compliant institutional-grade image. Market perception could easily get tangled up in the political and ethical debates around the Trump family's crypto activities. So while a pro-crypto stance from a potential administration is a possible boost, the controversies tied to a partner could just as easily invite scrutiny or skepticism from other institutions that prioritize governance and ethics above all else. And what's particularly interesting, as noted in the sources, is that WLFI mention of using these tokens for a strategic reserve. The sources suggest this could hint at a potential and probably controversial policy direction, actually integrating digital assets like tokenized treasuries into national financial strategy, a strategic reserve of tokenized assets.
That could have massive implications for monetary policy, national reserves, even geopolitics. If that were ever pursued, companies like Ondo could be pivotal. However, the sources are clear. This would need a huge amount of clear federal regulation first, which just isn't there right now. It's a major challenge. It really highlights the speculative, maybe transformative nature of this whole political dimension for Ondo in the RWA space.
Okay. Looking ahead then, based on all this material, what's the future outlook? What's the growth potential for Ondo?
Generally, the sources point towards substantial growth potential, driven by a few things. Continued product expansion, for one. They're looking beyond just treasuries, corporate bonds, real estate, global equity funds, and that Ondo global markets vision alone, aiming for thousands of public securities on-chain. That's huge ambition.
And deeper integration with TradFi, expanding onto more blockchains.
Yes, deepening those TradFi ties is key, and expanding their multi-chain presence is already happening. They're integrated with, over 80 DeFi apps across chains like Ethereum, Solana, Aptos, Stellar, Ripple, Mantle, Sui, Arbitrum, Polygon. And connecting to over 90 Cosmos chains via Noble, that reach is crucial for liquidity.
And we can't forget the biggest external factor, regulation.
Exactly. Regulatory clarity. It comes up again and again as the single most important catalyst for the RWA space, for Ondo's growth. Any optimistic forecast really hinges on favorable regulatory moves in the US and globally. And as the sources note, Trump's more pro-crypto stance could potentially make tokenization a priority, acting as that significant, if politically complex, tailwind.
Their current market leadership seems like a solid base to build from.
It is. Being dominant in tokenized treasuries puts them in a great spot to capitalize as institutional interest grows. That rapid TVL surge shows they're definitely gaining real traction.
What about challenges, though? What hurdles do they face?
The sources mention several obvious ones. Competition is heating up from other RWA platforms. There are huge complexities in just delivering these products and executing at scale. And of course, that persistent regulatory uncertainty globally. Plus, even though the underlying assets are stable, the value of their Ondo token could still get buffeted by wider crypto market swings. But what's really critical here, the key takeaway from the sources, Ondo's future path is almost entirely tied to that regulatory landscape, US and global. Clear rules are needed for institutions to really jump in, for the whole RWA sector to scale. It's the biggest external make-or-break factor. At the end of the day, Ondo's story, based on this material, is this fascinating mix. Cutting-edge blockchain tech, like their Cosmos chain, those DVP tests combined with a really deep understanding of TradFi's core needs. Compliance, risk management, stable yield. It's that holistic approach tackling tech, regulation, and market demand all at once that seems to set them apart. Suggests they're trying to build real foundational financial infrastructure, not just chase the latest crypto trend.
So we've taken a pretty deep dive into Ondo Finance. We've looked at their products, their unique tech, like that purpose-built Ondo chain, their really impressive list of TradFi partners, and yet even some of those complex, maybe controversial political connections highlighted in the material you provided.
Yeah, what really stands out is Ondo has clearly carved out a position as a frontrunner, bridging TradFi and DeFi using RWAs, with a laser focus on institutional needs, compliance, backed by some serious technical innovation and those landmark tests, like the JPM DVP.
But as we discussed, that regulatory landscape, still absolutely crucial, still uncertain, competition's definitely growing, and those unique political associations, as laid out in the sources, they undeniably add layers of complexity, potential risk that Ondo has to manage carefully.
We've seen how Ondo's vision extends to tokenizing everything from treasuries to potentially thousands of stocks, maybe creating that Wall Street 2.0. And we've also seen how political connections, however the sources frame their controversial aspects, might just influence the future regulatory climate for digital assets. And maybe even touch on really big ideas like that national strategic reserve of tokenized assets mentioned.
Given all that, here's something to chew on. Will the future of global finance really be built on this kind of blended system, mixing public blockchain transparency with permission controls? And maybe more importantly, how much will politics and specific political connections actually shape which companies and which technologies ultimately win out in this huge transformation? What does all that mean for you as you try to navigate this incredibly fast-moving landscape?
Good morning, and in case we don't see ya, good afternoon, good evening, and good night.